Well, damn, son.
What's up, everybody? Welcome to BossBlunts Think Tank. We're here to cover stock market crash 2022, just like we have been from the first trading day of January until this actually happens. Or should I say, finishes. Because the Fed is in for a treat. Their soft landing is all but impossible at this point. And we're at a point where the SPY is currently down 3.96% today alone. Let's see if the Plunge protection team jumps in to save the markets yet again, or if they've run out of powder. What's going on, everybody? How you doing in the think tank?
It's all good.
What's going on, Zoom? The SPY is down 3.96%.
Get in there, Yeller. Hurry up.
Come on, old
dare
Yeller.
ya.
What you got? Let's fucking go. Look at this hot mess. The SPY is hanging out at 392.
See? Told you, looking flaccid.
Oh, well, I bet you
I'm looking
Kevin
at-
is calling for people to buy the dip. And, well, you know how that goes. How was that dip the last time he bought SoFi? The inverse
I
framework.
managed to buy the dip on the VIX.
Let's take a look at this. 392. We got AMC hanging out at 1286, right at the upper range that it's going to be at, I think, until things actually kick off here between $10 and $13. So that's pretty bullish as well. Get my time set on my timepiece. How's your guys' BBIG calls looking today? You guys up 68 to 100%?
Probably. I only have one.
That's all right. One is better than none, baby.
Yeah.
What's going on,
I'm
Wolfie,
just happy
Paul,
that my
Jeffrey?
MATs are up 200%.
Well, the reason we're here, the main reason we're here, is because right on schedule, thrift savings plans are about to get wrecked. Unfortunately, this is not something that brings me joy to share with people. This is not something that makes us feel good, but I'm still gonna fucking dance. It is what it is. Unfortunately, we've told you in the stream over the last month or so specifically that thrift savings plans that are held by federal employees, postal service workers, military personnel, and so on are going to be ineligible for withdrawal from May 26th, 2022 through the first week of June 2022. Unfortunately, mainstream media is now telling people, Fox News is now telling people exactly what we've been saying all along. The thrift savings plan is considering investing Fed employees' retirement money in Chinese-controlled companies. Emerging market ETFs that are going to be affected by Executive Order 14032 on June 3rd, 2022, making the vast majority of these Chinese military companies and Chinese technology stocks worthless garbage. Worthless. Not a dollar, not a penny, 0.000. Looks worse than Luna at this point. I hate to say it. The timing of this is precisely in line with the thrift savings plan being taken down so that people cannot make changes. They cannot sell if their fund rockets to the moon to lock in their profits. They cannot sell if the stock market crashes and burns to the fucking ground with every dime that they've ever earned invested in the markets right along with it. take a little peek at the stock market. S&P 500 was down 3%. Let's look at the other client portal so I can show you a more updated time frame here. The NDX is currently down 4.89%. The NDXT is down 5.04% at this very moment. Only 11 minutes into power hour. We've got a long fucking way to go. The SPY is down 3.92% at this very moment. The volatility index is up to almost $31 a share, an increase of 18 percentage points plus today alone. The VXX, the exchange traded fund owned by Barclays and run by Barclays, is being delisted because it has become depegged from the volatility index, from the VIX. The VXX no longer follows the VIX, and therefore Barclays has confirmed that they will be removing and delisting the VXX in the near future. It has been confirmed by Barclays. This should be a clear indication of the liquidity issues that are happening in our markets. This should be a clear indication of Americans and federal employees and postal service workers and military employees, companies being, basically their savings plans are being hijacked, and they're being forced to hold a bag of excrement, the likes of which the stock market has not seen in any of our lifetimes. There are $800 billion, over $800 billion worth of thrift savings plan money that belongs to federal employees, military personnel, that is going to be locked in these TSPs. And at this very moment, Fox Business this morning has told us that the thrift savings plan is considering investing the Fed employees' retirement money in Chinese-controlled companies. This is just in time for the executive orders. Executive Order 14032, signed by the President of the United States on June 3rd of 2021, goes into effect on June 3rd of 2022. And this will make many Chinese military and technology companies completely worthless. We saw it happen in January of 2021 when Executive Order 13959 came into play and caused massive amounts of Chinese companies, I'm sorry, not a massive amount, only about 35 of them, to become worthless collateral. And that caused a massive increase in stock prices that were short squeezing, like AMC and GameStop and Ocugen Pharmaceuticals and Sundial and many, many others. That was January 28th. It is alleged that the White House called Virtue and Citadel and told them, and broker dealers, and told them that they needed to go position close only on stocks like AMC and GameStop. This executive order was extended until May 27th. May 27th, the same executive order 13959 came into play. It was amended and authorized to make this Chinese collateral worthless on May 27th, 2021. On June 2nd, 2021, we saw AMC hit its all-time high of around $77, $79. On June 3rd, this collateral was given back to the hedge funds and market makers by way of Executive Order 14032, signed by President Joe Biden on June 3rd, 2021. This gave them 365 days in order for companies to divest themselves of these funds. However, that has not happened because BlackRock has barely started to sell only $370 million of that emerging market ETF crap last month. And they own billions, if not hundreds and hundreds of billions, if not trillions of that. And I'll prove that to you shortly. This executive order was extended through June 3rd, 2022. That means that all of these companies will again be worthless on June 3rd, 2022, as long as this executive order is not extended, which we know probably is not going to happen considering China is, there's been leaked audio and video of Chinese officials discussing the invasion of Taiwan and the defeat of U.S. regional forces in the area, in the Taiwan Strait, in the South China Sea. Meanwhile, China continues to support Russia and do business with them. The Department of the Treasury, Office of Foreign Asset Control, added regulations to implement this executive order related to securities investments that finance the communist Chinese military companies that were amended by June 3rd, 2021 executive order related to the Chinese military-industrial complex and surveillance tech. This hit the Federal Register on February 16, 2022, and added about 30 more Chinese companies to the list. China Electronics, China Aerospace, China General Nuclear Power. You get the hint. You get the idea. It's all across the board, all sorts of companies, China National Nuclear, China Telecommunications, and the list goes on. Because this isn't all of them, there's just the ones that were added via this amendment. Currently we're seeing Bitcoin liquidity washed away from nearly 40,000 to under 29,000 in a matter of a few days. Additionally, China has stopped reporting bond trades by foreigners. Yes, you heard that right. China has stopped reporting bond trades by foreigners. When else did this happen? 2019. It happened April of 2019, a mere several months before the September 2019 issues with the reverse repurchase program came in, where the Federal Reserve had to step in to save the reverse repurchase program, which is basically an overnight bailout. An overnight bailout that happens every single day. China just saw a record bond sell-off. Now its main trading platform is not publishing foreign debt trades. Check this out. On Business Insider, we can see clearly this was posted today, just several hours ago. China just saw a record bond sell-off. Now its main trading platform isn't publishing foreign debt trades. BlackRock and Vanguard in January and June of 2021 and May of 2021, because it went from May through June, they were forced to offload billions and billions of dollars worth of investments to comply with U.S. government's decision to blacklist Chinese companies with military connections. This is from the Financial Times. This order, which came into effect Monday of May 2021, forced index providers, including MSCI, FTSE Russell, S&P Dow Jones Indices, and JP Morgan, to announce the removal of several Chinese companies from their indices. And as I just stated, the number of companies that are going to be removed from their indices is going to double because the U.S. Treasury has increased the number of companies on that list via their February 16th, 2022 amendment to the registry, amendment to the executive order that's been listed on the registry as of that date.
Holy shit, it's happening again.
Again, yeah, deja vu, right? Deja fucking vu. After record net sales of sovereign debt, China's primary bond trading platform for foreign investors hasn't published data in a week. In a week! They haven't published data all week, and they have to. Turmoil across Chinese markets escalated due to COVID-19 lockdowns, and the lack of data reporting raises questions about China's transparency into its debt market. We discussed here just yesterday, mere 16 hours ago, that Evergrande has not hundreds of billions, but trillions of dollars of debt, both private and onshore and offshore bonds.
Well.
Surprise, surprise. At the same time, as we speak, Silverback here in the think tank is giving us up-to-the-moment Treasury yield updates. And what do we see? Well, a hot fucking mess, of course.
An inversion on the 5-year and 10-year as we speak.
The 5-year is is 0.1% higher than the 10-year at this very moment. And for quite a while, they exceeded that of the 30-year. We saw a bit of a retracement over the last few days. As you know, the Federal Reserve and the stock market continue to be pumped, and continue to pump the markets via, well, let's just call it the money printer, via the money printer. We all know it's not a legitimate, literal money printer. It's ones and zeros typed into a keyboard. It's really that simple.
I'll take it.
I'll fucking take it.
In my head, it's still a big ass Cummins powered money printer. It takes a while for it to get up to speed.
The China Forex system last provided trade data by overseas traders on May 11th. People familiar with the matter told Bloomberg. These figures are typically published within 24 hours. Those same sources told Bloomberg, and they are not certain as to what the pause is exactly related to. If you haven't figured it out yet, what the fuck are you doing in the stock market? Go play with Legos. Those figures are typically published within a day, and foreign investors sold a record $18 billion of Chinese debt in March, as reported by the Financial Times, as Chinese bonds have become less appealing for offshore investors, as surging U.S. bond yields offer more promising returns. Well, I don't see surging bond yields. I see an inversion in the yield curve, which has triggered, or should I say, has been an indicator of a recession 10 out of 10 times. Meanwhile, BlackRock last week downgraded Chinese stocks to neutral, and the world's largest asset manager forecasted a rapidly worsening outlook for the country's economy. At the same time, as of today, Fox News is telling us that the Thrift savings plan, holding military and federal employee savings accounts over $800 billion worth, almost $1 trillion worth of liquidity for market makers and hedge funds and prime brokers, is not going to be accessible from the 26th of May through the first week of June. The same time that we're going to see this executive order 14032 come into effect once again. And at the same time, BlackRock is downgrading Chinese stocks to neutral. We saw in 2008, if you've watched The Big Short, you've seen that in 2008, the mortgage crisis was a long time coming. And it was kept afloat artificially by the banks involved until the very moment that they had all properly divested themselves and positioned themselves for the market crash. That's what we're seeing right fucking now. 2008 on steroids. 2008 times 10. The number of derivatives has also increased times 10, from around 80 billion to almost from 80 trillion derivatives to almost $500 trillion worth of derivatives from banks alone. That does not include quadrillions of dollars worth of derivatives from other companies. That is strictly banks and their holding companies. $500 trillion nearly of derivatives, and they are over leveraged to the tune, for example, Goldman Sachs over leveraged to the tune of 130 to 1 on these assets through the use of bilateral netting, continuous net settlement, and rehypothecations. Rehypothecating the same fucking assets over and over again, from the mama bank to the baby bank. But guess what? The new collateral haircuts we covered on this channel just last week make that impossible. Because the appendix in the collateral haircuts proves to us that these banks can no longer rehypothecate from the parent company to the sub company their same assets. The Chinese yuan does not look appealing to investors right now, according to Morgan Stanley strategists. The zero COVID strategy is obviously causing market concern, so he thinks that it's posing a bit of short-term headwind for this sort of story about a rising RMB. This is the exact same thing that I remember seeing during 2008. How about you guys? Were you guys, do you guys remember it? Were you guys there? Do you remember how many people lost their investments, their 401ks, their homes, their cars, their jobs, their life savings?
Loads.
Yeah, I lost my job and my college tuition, or college grants.
Your college, I'm sorry to hear that. And I bet those student loans still need to be repaid, huh?
Yeah.
Yeah, and that's not your fault. Student loans are currently the absolute best way for the United States government and banks to keep Americans indebted for life. You cannot write off student loans on your bankruptcy. You cannot write off parking tickets on your bankruptcy because that money belongs to the government. So your federal student loans cannot be discharged.
Unforgivable.
Unforgivable. That's right. Jesus. Let's take a quick look at the markets before we have a complete collapse and while we're talking about this at this very moment. There we go. I am not concerned in the slightest about the price action at this very moment on meme stocks because it is not real. In my opinion, a lot of the movement in stocks like BBIG, for example, is due to rotational selling and buying. Money leaving stocks like Target and money coming in to stocks like BBIG to close out short positions. I'll just pull up the symbol. Hang on one second. Yeah, that's what TGT. Has anybody been checking out Target Corporation today? Take a look at this stock price.
I have not.
Prime hedge fuck Collateral down 26% today. Look at that gap down.
Oof.
Yeah, no shit. I can barely fit it on the screen here. Let me try to make it a little smaller. From almost 215 plus a share down to currently $158 and change.
Ow.
Now, I know some people believe that it's due to earnings reports. Now, many people need to realize that earnings are not that important because stocks are already ridiculously overvalued. If you look at the Case-Shiller PE ratio of stocks, they're at all-time highs. The price to earnings ratio, even accounting for inflation, such as Nobel Prize winning laureate Robert Shiller showed us in the past through the use of his CAPE PE ratio, which shows how overleveraged stocks, economies, and markets truly are, has proven that the current market doesn't give a fuck whether or not a company's price to earnings are good or bad. Therefore, the price to earnings and the earnings report today trading lower due to worse than expected Q1 earnings per share and a reported drop in operating income margin rate are basically a cover story for a sell-off. Market makers and prime brokers don't want you to know, and they don't want me to know, that they're selling off their shitty Target stock and their shitty Netflix stock and their shitty Redbox stock. Begin to see a pattern, which at one point is considered blue chip collateral, in order to close out positions on companies like AMC, GameStop, EVIG, and cover positions and roll contracts, ISDA contracts, swaps, married puts, divorce puts. The list goes on. closing out failures to deliver, and synthetic shares, naked shorts. I could go on and on and on.
And everyone needs to hit the like button.
Hit the fucking
We
like
got
button, please.
1,000 people in here. Come on.
Massive, massive gap down. Look at how much buying pressure occurred here first thing in the morning, looking at this on the 1 minute chart, in order to get this back up to the 163 mark after dropping from around $215 a share. It's hilarious. Got some weed in my throat.
And we're just at the beginning of the crash now.
What a fucking mess. Guys, Vanguard and BlackRock have various exchange traded funds that hold this Chinese bullshit. Several. Excuse me. Sorry about that, I didn't mean to cough on you. China Communications Construction, China Nuclear Engineering, China Railway, Semiconductor, etc. The Vanguard Total International Stock Index Fund had $400 billion in assets, and they are one of the largest fund allocators to 4 of the blacklisted firms. Just one of their FTSE Emerging Markets ETF index funds had a $72 billion in assets on January 6th, with an exposure of 43% to the Chinese market.
I can't believe it's happening again. We're so lucky.
You know, one thing that gets me is that BlackRock last month, just barely started selling off this Chinese junk. And they only sold off $370 million worth. But as of last year, they had over $700 million worth of exposure to the blacklisted Chinese securities. And that did not include the 35 new companies that old Yeller, Janet Yellen, added to that list. Janet Yellen on February 16th of this year added another 30 some odd companies. And last year, before that happened, BlackRock had an exposure of $700 million in one ETF alone. One ETF, not all of their funds. Okay, do you understand just how much money that is? I know we throw numbers around like it's going out of style, but 700 million. And then they added 30 or 35 more companies to that on February 16th of 2022. So even if they did sell off $370 million worth last month, there's probably still close to $1 billion or more just in that one fund alone for BlackRock. And as we know, BlackRock owns over 40 million shares of AMC, which they loan out to companies like Virtue and Citadel, Susquehanna, State Street. So when BlackRock's US listed iShares Core MSCI ETF had $70 billion in assets with 36% exposure to the Chinese market, that's a pretty big fucking deal. Because that proves to us that they have tens of billions of dollars in exposure to the Chinese market. Plain and simple. China's cutting off reporting of bond sales. And the United States is holding thrift savings plans hostage, making it impossible for people to sell. We need a moment of silence for our stock market and these retirement plans. It's going to be an interesting time ahead. AMC hanging out tight at 1267. BBIG is up 11.5% today, currently at $3.20. Excuse me.
And SPY is free falling.
All right. And the SPY is free falling pretty much, yeah. You can see a lot of these. Look at GameStop is at $92.49 right now, down 7.8%. IWM, iShares Russell 2000 ETF, is down 3.78%. This has a lot to do with the price of AMC and other stocks that are held within the Russell 2000. There's another thing going on June 2nd, however, that's beginning in June, that most people don't know about. And that's the reallocation of funds and reallocation of stocks within indices, within exchange traded funds such as IWM. AMC is most likely, due to its market cap now, going to be moved up into the Russell 1000, just like GameStop in the beginning of June 2022. Sorry, I misspoke. I meant to say just like GameStop was last year. Last year, in 2021, in June, GameStop was moved from the Russell 2000 to the 1000, and AMC, due to the date of the reading of the market cap numbers being missed by just a few days, AMC was held in the Russell 2000 for the rest of the year. Now, in June of 2022, AMC will most likely, due to its current market cap, be reallocated out of the Russell 2000 and into the Russell 1000. This will cause ETFs like IWM and IWN and many, many others like it to most likely short squeeze and either gain or lose a lot of value. Because exchange traded funds are also heavily shorted. And when IWM is shorted, everything inside of it, such as the 12 million AMC shares inside of it, are worth less because they're seeing that short pressure. These are the market mechanics that the majority of people don't understand. Pantheon brings up a great point. The government does not have your back. BlackRock, the banks, the government, and mainstream media is not looking out for us. You and people that you love are in danger of losing their money if your money is invested in thrift savings plans. I don't know what's going to happen to the quote-unquote safest, or should I say least risky, the G-rated funds. But I do know that no matter where your money is, whether it's in a G fund or not in the G fund, within this thrift savings plan, that from May 26th through the first week of June 2022, people will be unable to sell. Excuse me. The thrift savings plan is a 401k style retirement account available to many military members and federal employees. May 16th was the last day to submit or access all forms to withdrawal, rollover, or transfer requests. May 26th will be the last day to make transfers between different mixes of investments or change contributions, where the allocations of the money you're putting into are going to. And the last day to contact the TSP by phone. Guys, you're not even going to be able to call to ask a fucking question if you have a TSP for this 2-week period. From May 26th, noon Eastern time, through the first week of June, account access will be unavailable. However, all invested funds continue to reflect market changes during that time period. Let's have a moment of silence for our stock market. It is quite a bittersweet moment, I gotta say. It really is.
Yeah, like it's some coincidence, right?
We're about to be here and here. It's not a coincidence for these things to line up and match perfectly.
It's collusion.
It's legal collusion. And I think next, after a stock market crash and a liquidity crisis and stable coins collapsing, I believe it's time for, as Janet Yellen told us, financial runs due to over-leveraged hedge funds. That will likely lead to short squeezes of epic proportions on stocks like GameStop, AMC, Sundial, BBIG, and MMAT, and many, many others. Here you go. This is the overvaluation of tech stocks to the S&P 500. The ratio. Look what happened in the tech bubble. Look at what's happened today. Starting when? The first trading day of January 2022. Why was that? Because, as we told you here as well, banks needed to cook the books through December 31st, 2021 in order to achieve maximum bonuses and maximum profits. Now that's over. It's time to play the game with the Federal Reserve and with your investments. And unfortunately, many people are going to lose a vast majority of their money. We've seen the Plunge protection team jump in many times here. For example, on January 26th, 2022, the SPY dropped over 13% to a low of 364 in a 1-minute candle. This was artificially stopped by the Plunge protection team via an injection of $50 billion worth of selling naked shorts on the volatility index in order to create a gamma squeeze and volume pressure buying on S&P 500 stocks in order to increase the price of the SPY immediately and quickly. So within 1 minute, the SPY dropped 13% in value and gained it back because the Plunge protection team invested $50 billion in 1 minute to sell naked shorts on the VIX. And what happened the next day? The next day, 2 days later, because the data is T+2 data, the United States Treasury had a 52-week high of failures to deliver. Janet Yellen and the United States Treasury failed to fucking deliver on their naked shorts on the volatility index in order to prop up the stock market. This is a proven fact. You can see it on Bloomberg terminals as unnamed buyers. The Federal Reserve, I misspoke. The Plunge protection team, through the use of the Economic Stability Fund, is the only entity that can make a purchase or sale of that size and be listed as an unnamed buyer. So it might as well say Federal Reserve, U.S. Treasury, Plunge protection team, head of the Plunge protection team, Janet fucking Yellen, with her right-hand man on the Plunge protection team, Gary Gensler. Now, how much? Well, how much is vulnerable? The Honorable Janet Yellen says the most significant systemic risks to the current financial system is basically the aggregate liabilities to the tune of over $18 trillion. That level was 80% of this country's gross domestic product. Some types of money market funds, as well as other cash management vehicles, remain vulnerable to runs, and bond mutual funds continue to grow rapidly and remain exposed to risks due to their large holdings of illiquid assets. Stablecoins can suffer from structural vulnerabilities, and their market cap has grown about 5-fold over the past 12 months. What happened to Luna? Does everybody know what happened to Luna, the stablecoin? I bet you do. And if you don't, it didn't go to the moon because Luna was a Ponzi scheme, just like Tether. I know a lot of people are going to hate, a lot of fanboys are going to hate on me talking shit about Tether. But Cash, I think we're the kings of unpopular opinion at this point, brother.
Tether has been shared for years.
Investors have been withdrawing their money from mutual funds and retirement accounts in massive, massive numbers. Look at the outflows in 2020 during the stock market crash of 2020 due to the pandemic. Look at the outflows that have just begun as of January of 2022 here on my screen. Looking here, the 3-month flows into money market mutual funds is down approximately $280 billion as of the last 3 months. In, let's see, April of 2020, that was right around 300. Oh, sorry, that was right around, no, that continued to increase and was flat when the market crashed. However, the 3-month flows into equity funds and ETFs decreased by 300 billion, and they put them into money market mutual funds. What else decreased? All bonds and ETFs. What's going on now? We're seeing money market mutual funds decrease 300 billion nearly, and all bond funds decrease nearly 100 billion, or should I say over $100 billion, which makes this the worst bond rout in over 800 years, and that's a fact. Look at what's happening with 3-month flows into equity funds and ETFs. This is the killer here. This one is, in my opinion, the undeniable. Looking at it clearly, there is a negative flow of money market mutual funds. There's a negative flow of bonds. And there is absolutely no flow left here, almost at all, of equity funds and into equity funds and ETFs. So that's about to go negative as well. When's the last time we saw all 3 of these go negative? It's not here. It's not here. Why? Because we've never seen a stock market collapse of this magnitude. Never. I think it was time to change the hat. Because sadly and gladly, I'm already hedged for this market crash, as are many other people out there like Dr. Michael Burry, Dr. Marco Metzler, and many, many others. But we have not seen a collapse of all funds. We have not seen a collapse of mutual funds, equity funds, and bond funds in negative outflows, into outflows, I should say, negative inflows, since at least 2008, if not sooner. I don't even think we did see that in 2008, because at the time, banks continued to, even though they weren't using repurchase, it was pretty rough. It was pretty rough. Let's just put it this way. They demanded other forms of payment and other bonds, and they were not accepting repos, overnight repos at the time, especially not from companies like Lehman. The massive outflows from the stock market should give people an indication of what's happening. Thanks to @SuburbanDrone for posting this chart. Walmart weekly chart. Walmart has lost more this week than it did during the stock market crash of 2008, the Great Recession. Consumer sentiment. The way that we feel as consumers, according to this survey from the University of Michigan Consumer Sentiment Report, is at 59.10. The last time it was at this level was 2011 during the ceiling debt crisis, the debt ceiling crisis, 2008, 2009, repeatedly. Consumers have not even begun to feel the true effects of inflation just yet. Let's take a look at the stock market. The SPY is down 4.19%. 4.19% right now. Stock market crash 2022 is here to stay, boys and girls. And motherfuckers are gonna burn. That's for sure.
I will dance.
Don't fucking dance.
I'm gonna fucking dance. I'm tired of
I will
pretending.
dance.
I'm tired of fucking pretending like it doesn't bother me. I'm not happy about it, but I can't fucking stop it. What am I gonna do? Buy up fucking billions of dollars worth of equities? Of course not. I don't have that kind of fucking money. But I can watch it happen and I can hedge myself for a stock market crash and the inevitable short squeeze to come.
It's not like we're warning everyone.
Right, it's not like we've been shouting it for the last year from the rooftops on Reddit, Twitter, Facebook, YouTube, Rumble, everywhere you can fucking think of. LinkedIn. We've been repeatedly warning people about this hot mess. Let's see if the Plunge Protections team steps in the last 5 minutes. We're down 4.25%. 4.25 fucking percent. We might be millionaires today, Cash. Oh, well, I mean, we're already fucking millionaires, but we might be millionaires on the VIX today, Cash. It's at 31.23. Does that sound about right? I don't fucking think so. It's got a long way to go. The SQQ is up 15.5%. You know what? How are my ARC puts looking? Let's take a look. How's ARC doing? ARC is down 4.7% to $41 a share.
Yeah.
BBIG is up 6.64%, and Biora Therapeutics, for those of you that don't know, is formerly known as Progenity. Thanks to Martin, I know that now, because Progenity changed to Biora Therapeutics. They're up 9.19%. Correct me if I'm wrong, Martin.
That is correct.
Thank you. C.H. Robinson Worldwide, a fellow transportation company, albeit a much larger transportation company than mine. C.H. Robinson, is down 6%. Why? Because trucking and logistics overall has been down in the United States and globally for the last 2 months since the beginning of March. Partially due to lockdowns in China, partially due to a completely faltering global economy. GameStop is down is at 91.40, down 8.95%. The Dow Jones Industrial is down 3.69% at this moment. Hycroft is down 6.7%, hanging out at $1.25. Those calls are probably looking awfully tasty right now. Yeah, Metamaterials down 1.75%. Man, those calls are probably looking so good. I'm so happy to see that. NDX and NDXT are down 5.13%. Netflix is down 7% to 177. Ocugen Pharmaceuticals down 6.76%. Hey, you guys want to see what happened to Ocugen last year? Does anybody know? Does anybody not know? This is a fun one.
5,000% of fun.
5,200% plus of fun in February of 2021. Absolutely right, dude.
I have some of those clothes right now.
I own a couple as well. I think I might say I'm pretty happy about that. Let's take a look and see where they're at.
Man, I'm jacked to the tits right now. Holy shit.
Look at what happened.
Late.
Look, bro, Ocugen, February 8th, 2021, just a week after the January 28th position close only of AMC and GameStop. Right on or about the date that AMC and GameStop were allowed to reopen for trading, February 8th, Ocugen ran 5,259% on the one-year chart. Bionanogenomics, 2,894% on February 16th. Others as well, many, 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 many others. Tilray, 1,083%. CPS Tech, 1,400% on February 16th. Jibo, 1,388 on February 10th. Orbital Energy, 1,250% on February 16th. Ocean Powers Tech, 214% on the 9th. Let's take a look and see what else. Senseonics, 1,310% on February 16th. Foresight, 1,079% on February 10th. Are you noticing a pattern? Top Ships, 256%. Adaxis, 192%. Guardian, 500%. And so on.
Yeah, I'm seeing a pattern, Professor.
Naked Brands ran 1,845% on February 11th. Sundial, one of our favorite weed stocks, February 10th, 2021, 1,671 percentage point gain year over year. Zyomedica, 3,122%. This is what these market makers, the government, the banks, these hedge funds, Janet Yellen, and this is what they're fucking scared of. And it's going to happen again, in my opinion.
Financial runs. Here we go.
Financial runs. As proven by my ex-girlfriend, Bull Yeller. Or should I say, as stated in front of Congress several times. What comes after the stable coins? Like Luna and DEI. Hang on, let's take a look. We got just a few seconds left in the market. Let's see, the SPY is down 4.08%, 4.11. We've got just a few seconds left here on the clock before the end of the day. The SPY is at 391.38, down 4.13% at the
Damn,
moment.
it's dropping hard right at the end.
Surprise, surprise, huh? What an incredible day. Hey, Cash and Zumbach, what did I tell you guys would probably happen yesterday?
You called it.
But can you tell them specifically what it was?
No, you were wrong. You said it'd go down 3.5%.
You liar.
Yeah, that's a dirty, stinking lie right there.
They had to make up for the gains from yesterday, right? So they bring it up 2% yesterday to dump it 4% today. Bam, that's the bell. Negative 4%, even, flat, exact 4% loss on the SPX. Meanwhile, the SPY continues to trade. The SPY is now down 4.05 to 391.83, and it's shifting around very quickly right now. It's moving a lot. There's a lot of action on the SPY right here after hours, in the first minute of after hours. Same was the SQQQ, the ProShares Ultra Pro, basically the antithesis of the QQQ. It's up 14.73%, hanging out at 57.30 and change. Looks like the bank stocks are hurting quite a bit as well. Goldman Sachs is down a couple percentage points, as is JP Morgan. And the meme stocks took a massive hit in the ETF buying and selling that was going on.
We're watching history unfold right before our eyes.
We're so fucking lucky. We're so God blessed here that people don't even realize, in my opinion, what's really happening. And I'm not a financial advisor, and none of this is financial advice. They're just my observations that could or could be wrong. Could be correct or could be wrong. Let's take a look at the UVIX. UVIX is up 28%. Those are 2x long VIX futures ETF. It's up to $22.65, up 28% on the day. Gold and Gemstone Mining Company, GGSM, is up 25%. They're a fucking penny stock, but all this OTC bullshit is getting abused hardcore now, more so than ever. Let's take a look and see what else. Bright Green Corp up 100%. Decision Point Systems up 67%. Magenta Therapeutics 34% gains. The UVIX, the 2x leveraged long VIX futures exchange traded fund, is up 28% on the day. Big Bear AI Holdings up 25%, and the UVXY, the ProShares Ultra VIX futures, is up 20.94% to $17.62 or so right now. Direction Daily Semiconductor Bear 3x leveraged ETF, SOXS, is up 15.29% to $80.50 or so. Same thing for the Direction Daily Tech Bear 3x leveraged ETF, TECS, is up 13.59%. The bear market is here to stay. I'm not a bull nor a bear. I'm a realist. And I try to be proactive, not reactive. That being said, I think we're all going to be so goddamn fucking rich if you're properly hedged. I wish you all peace and wealth. Be careful with those stable coins. Be careful with your investments and your money. Don't let anybody tell you what to do. I'm not a financial advisor. None of this is financial advice. You have to decide what's best for you and your family, because nobody else knows what your position is and what your financial risk tolerance level is. But it does look like the military thrift savings plan is at risk for at least a period of 2 weeks, in which the BlackRock, which I believe runs the TSP, is actually going to be investing the thrift savings plan monies in Chinese market ETFs. Good luck to all.
We're gonna be filthy rich. We're only the president.
And I wish you were fucking lying, but I just don't think that's the case, brother. Look at the food and agricultural index. You know, has gone up substantially over the last couple of years, and that's not even funny. It's actually quite disgusting, and I feel sorry for those people that don't see it coming. But that's why we're here, and that's why we're trying to educate. So if you learned something new, please consider subscribing or drop a like.
If the share that life button, smash it.
Smash that fucking like. Do it for your friends that need to see this fucking video.
Hey boss,
What's up,
quick
brother?
question. That snazzy looking hat, where do you get that?
Oh, this one? BossBlunts Think Tank Shopify, man. Check it out.
Awesome.
Yeah, dude, link is in the description.
Profile back there.
10%
How about
off.
that?
Coupon code is End the Fed. 10% off coupon code is all one word. End the Fed. ENDTHEFED. If anybody wants it.
Oh yeah, I love the hoodies and the hats.
Thanks,
I
brother.
have some.
Yeah, appreciate it, man. We gotta rock them everywhere we can. You know how many people ask me about this? People ask me about it all the time, and I tell them exactly where to go to find the information. Let's hear that fucking song one more time. We're gonna be so fucking rich. We're gonna be fucking rich.
Let's fucking go!
Yeah, man. Can you feel it?
And all you people in the voice chat with Vibin, what does the money printer say?
Yeah, T. Speak up.
Oh yeah.
Say it louder for the people in the back.
So goddamn rich.
Peace and wealth. Have a great day.